Scott Bauer, the CEO of Prosper Trading Academy, joins us this morning to talk financial markets. Scott, happy Tuesday. The U.S. You too. The dollar recently found support around 89, that 90 even level coincides with the lows we saw back in February, I think it was, of 2018. It rallied back to 92 recently, but has stalled. What are the bulls waiting for as far as the next leg up?
You know, it's real interesting right here, Ben, because on this rally here, and we're sitting right around 92.06 or so, the correlation with risk appetite seems to be diverting rather than converging. What do I mean by that? Well, you know, we're seeing the markets trade at all-time highs, and there's a lot of momentum behind all of the equity markets here. Yet there's the risk, there's the concern pretty much worldwide of the new Delta variant of coronavirus, you know, becoming worrisome again. And typically you would see the dollar, the yen, those, you know, risk off currencies be the ones to benefit from that, which they are, but that is usually at the expense of risk off elsewhere, which we're not seeing. So, you know, I think the bulls are pretty happy right now. What's going to make it get, you know, to those highs that we saw last week, or, you know, when the Fed made that announcement? I'm not really sure here. I honestly don't know, other than, you know, maybe it's the jobs number on Friday. If we get you know, just an all out, really strong over the top number, I'm not sure what would push it above those levels.
Here are those levels, Scott. 92.39 is the dollar. It spiked up into, as you mentioned, the Fed announcement. We saw some follow through. It topped out there. It's really yet to take them out, but it's really yet to see price decay off that level. And just a quick step back from that intraday look, and this is the dollar on the daily time frame. I've got my eye on this level that we saw back at the end of March, the beginning of April, when we came off up around 9,300, we'll call it, 93 even, and ultimately that coincides, well, we've seen a trend environment to the downside that coincide with a key area of resistance. We were talking about how if the bears were in charge, they'd step up. They certainly did, but unable to take out that lower level. Scott, inflation feeds into this discussion, the dollar rates ultimately. While there hasn't been a clear connect between the U.S. dollar and rates as of recent, or for some time now, I guess one could argue. But, you know, I'm starting to think about it, and I'm wondering, could we see the dollar continue higher here? Because the Fed's been pretty clear. We're going to see some inflation, but it may not necessarily be here for very long periods of time. It's going to be, as they've called it, transitory. But even in the short term, I mean, in theory, that could firm the U.S. dollar as well some, in addition to some of the safe haven type tendencies you just talked about.
It should. Again, you know, historically, it really should. And I think that, you know, the next economic data point that we're going to get is that big jobs number, the June number on Friday morning here. The last 2 months, you know what? We've missed estimates for the last 2 months here, and the market has, you know, looked at that more so as a Goldilocks type of number. So that's why I said that perhaps if we get a number that is over the top, we're really beating expectations, and I think the number is 690 for June, maybe that's what pushes it higher here.
You know, Scott, I just wanted to pull a couple charts here real quick. I want to point out here, we're just talking about the U.S. dollar and that key area that we recently came off of. Let's take a look at the bigger picture, because the daily showed, again, the run up, how we're now below 93, up above 89, so kind of in this limbo area right here. But this was the level I was talking about, the lows from February, the Feb 2018 lows that we saw, 89, 90, even finding support right there. And then, well, I mentioned the upper extreme, that March, end of March high, 93-ish, 93.50. But if we get up above that, then we could open up the door, retest that 104 level even. That's a range we've been in. Scott, real quick, I just wanted to point out, here's a look at dollar, U.S. dollar versus rates. I've got TNX in the candles right here. And one could argue, I guess, both have kind of settled into a bit of a range here. In terms of some of the potential catalysts here, we've been watching some of the foreign currencies. You mentioned the yen, kind of in the dollar discussion in terms of one of those safe haven type moves, or lack thereof, I guess, in some cases. Let's talk a little bit about some of the other foreign currencies. The British pound has been losing momentum to the upside, and then an interesting divergence between crude and Canadian dollar. Oftentimes we watch the two products track each other very closely, but the pound and the Canadian dollar have been coming off. Crude's been remaining fairly strong. You're obviously not always the tick-for-tick type correlation, but these are products, currencies that we should be watching in terms of the U.S. dollar strengthening as potentially the culprit.
Yeah, no doubt about it. The British pound has been weaker. The sterling's down to, I think, 138. It's a 2-month low. If we look further and go east, we always look kind of at the Aussie dollar, the New Zealand dollar in terms of risk appetite. The Aussie dollar is down to under 0.76. The euro is down near its 2-month low here. So, Ben, you and I have had this conversation often. Is the dollar rallying against these other currencies because it is the best of class out there, or is it just because we're kind of in this environment that there's no strength really anywhere, and the dollar is maybe the least worst of everything that's out there? So, I think that's real interesting. In terms of the Canadian dollar breaking down here a little bit versus what we've seen with crude, typically that correlation is very high. We see commodity prices, especially crude, rise, and we typically see a stronger Canadian dollar. And, that's been breaking down a little bit as well.
Sure has been. Watching the move. I was keeping a close eye on this. The trend environment we had been seeing, it topped out around 83.28, and one of the big reasons I've been watching this decline, not only the impact it has on the U.S. dollar, but how we've watched here. You can see the divergence that's played out. This is the candles again, the Canadian dollar, the move lower that we just looked at a minute ago, or a second ago, I should say, on the daily. Here you can see the purple line, crude, continues higher. It'll be interesting to see how this divergence resolves. Speaking of divergences here, actually, copper crude, a very similar divergence, almost identical in terms of what's playing out here. One way, either the copper's going to rally or crude's going to roll over, Canadian dollar will rally or crude will come off. But Scott, jobs this week, a lot of focus here. Things kick off really tomorrow. We'll be talking ADP, Challenger Job Cut Report with the weekly jobless claims on Thursday and non-farm payrolls on Friday. I mean, that's going to really be the major focal point for investors, for traders, and potentially also, as mentioned, one of the next catalysts here for the U.S. dollar and rates and financial markets in general.
It really is, Ben, and I think we might get an oversized move one way or the other on Friday because of the holiday weekend. We're not just going into regular weekend where we've seen activity over the last couple months, but with the holiday next Monday, we may see big funds, traders, and the like just really paring positions down ahead of that number. My guess is if we see, again, kind of a number right in the range of what's expected around that 690,000 number, the market's going to take that as a real positive. The only thing that I think that can, maybe derail this rally, but absolutely help the dollar here is if we see a real hot number well above 690K, maybe even over 1 million.
All right, I like it, Scott. It gives us something to watch. Scott Bauer, the CEO of Prosper Trading Academy, joining us to talk financial markets and, well, get a step ahead here of some of the potential catalysts here in the U.S. dollar as far as what's been playing out with this bid off the 89.90 even level, back up into 92. Scott Bauer, thanks for sharing part of your Tuesday morning with us.